Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, December 13th, 5:04 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days on November 1st and 2nd, and this has been a 6+ weeks in the market that has been one of the this one will go into a model book as the action that happens after a follow-through day and the action of leading stocks, and it was cemented today. You can see over here on the trend gauge, market leadership flagged with a green arrow. We've had that since the Friday after the follow-through day. Leadership was pretty clear that from that 11-1 and 11-2 follow-up, and it stood out almost immediately. Short term, we're on the green arrow also, and that's from the day after the follow-through day as well. Yellow caution sign here because we are historically extended above what's typical for a 21-day exponential moving average. But this may not be a typical market if we're in a very strong bull overbought indications and being extended to the upside will continue for longer than you think they can. Also, a green arrow on the 50-day moving average. Same thing with the yellow caution signal. We're over 6% extended on the S&P 500, over 7% extended on the NASDAQ 100 from the 50-day moving average. Long term, all 5 of the major indexes get the green arrow above the 200-day moving average. I do have to point out we've got our data scientist intern, Luke, is crunching a bunch of data going all the way back to 1968, and we're doing a bunch of pattern recognition, recognizing different types of markets and what's typical for strong markets versus sideways versus weak markets as far as length of rallies above these particular moving averages. So we're going to have a lot of data in our database to compare market conditions, as we always strive to get a little bit better every day here at Revere. So what happened today surprised me. I talked a little bit yesterday how we were extended on the 21 and the 50 when the yellow caution came out. My thesis was that Powell would continue the higher for longer that he had been harping on since they started the fight against inflation, and that the market front ran it, and we'd see a pullback, but we saw just the opposite, and that just goes. I think a lot of people were thinking what I was thinking, and the market seeks to fool the masses, and all we did was I don't ever remember an FOMC coming out at 2 o'clock and algos didn't do a stop hunt lower and a stop hunt higher before bouncing around. There was no move down, and it was just strong and got stronger. Little pullback after he closed his press conference, but rally into the close. The description is Dovish FOMC sparks strong, broad move higher, and that's what we saw. Here are the numbers. The laggards on the day were the big 7, only up on average of 0.67%. That's actually a good sign because it points to the other strength in the market. These big 7 are sometimes just a place to park money if you don't have confidence in other growthier parts of the market. But we saw those growthier segments really outperform today. Our RG8, the 8 growth ETF composite, up a big 2.65% on the day. S&P 500 up 1.37%, equal weight even better, up 2.1%. NASDAQ 100 up 1.3%, equal weight even better, up 1.95%. Dow up 1.4%, made all-time highs. Nowhere near all-time highs on a relative basis if you look at a monthly chart, however. Mid caps up a very strong 2.51%. Russell 2000 small caps up 3.52%. Global 60/40 up 1.26%. Equal participation from stocks and bonds as the dovishness on the Fed pushed yields down, moving bond prices higher. So that contributed to the 60/40 return. In-house GROTECTION up 1.87% on the day, led by quite a nice performance in some of our recent leaders that we purchased. Let's get to the charts and the tail of the tape, and you can see very clearly I was concerned about 4th day up, 5th day up, the strongest of the 5 days. What a move. Let's go to a monthly chart here, and we're now above, let's see, let's track price here. 46.37 was the high on the bounce after we started to consolidate off of the highs. This was the first leg down in the correction during 2022. Now we're looking at this 48.1862 all-time high as the next target level for the S&P 500. Hard to believe we're less than a little more than 2% away from that. Back to the daily, let's go to the NASDAQ 100. Again, 5 days up, biggest move of the 5 days, up 1.3%. Let's go to the monthly chart, not quite at all-time highs, 408.71, the all-time high back in November of 2021, but just a little bit more than a percent away from that. Dow Jones Industrial Average, biggest candle of the 5 up days, clearing 37,000. We go to a monthly chart, you can see that this is an all-time high, 36,952 the prior, but look at the relative strength line. Relative strength line is actually below when the Dow was down near where it was for 12,000. So from a price standpoint, a great move. From a relative strength standpoint, you'd have been much better off in the S&P 500. That's primarily because of the lack of tech in the Dow Jones Industrial Average. Whoever controls that index really needs to get their head out of the sand and make it more representative of what's going on in the USA. Let's go to mid caps. There's a nice breakout after this 7-day consolidation, strong up move coming into, still haven't exceeded the July highs though, so we've still got room to run on mid caps and also small caps. Break out of this cup and handle, 7-day consolidation here too. When we go to the tail of the tape, you'll see one of the trades I made before to take a little bit of risk off was to exit our TNA position when we broke back above this. I put an IWM position back on, very clear breakout and a clear reference point too, with the pivot of the cup and handle, and just real strong all afternoon after the 2 o'clock move higher, after the 2 o'clock announcement and press conference. Here's the VIX. Up on the day, not a surprise, up 0.99%. But we also, we were talking about possibly ways of hedging if things went the wrong way, because we've had a real nice move and we were extended. One of the instruments I was looking at was VXX, which is supposed to be a way to play the VIX, but it's actually a combination of the front 2 months and the VIX contract. And although the VIX was higher today, if I'd have used VXX to hedge, I would have lost on both sides if it would have went down. VIX down on the day, while the VIX itself was higher. So tough to play the VIX. There's no spot VIX way to play it that I'm aware of anyway via an ETF. Let's go to the dollar. Dollar breaking down on a big move down after this recent bounce off the bottom, down 0.85%. That carried over to a huge move in precious metals. We'll start with gold, GLD up 2.26%. Very big bar here. So after this failed breakout, we pulled back, didn't quite even get to the 50-day moving average. Multi-bar break up higher today. GDX even stronger, up 6.38%, reclaiming the last 6 days of losses in one fell swoop. And silver, SLV, up 4.46%. Bitcoin staying risk on, trying to reclaim, still not back to last Friday's high, but looking like this shakeout down to the 20 level on BITO will hold, which was equivalent to about 40,000, up 4.27% today. Let's flip to bonds. Bonds, the big winner, also up 1.28%. I should say bond price is the big winner. Bond yield's the big loser. Here's TLT, up 2.35%. Just the opposite, the 30-year yield down to 41.83. So we peaked above 5 here. Now we're down to about 4.2%. And the TNX topped, couldn't get over that 5% level. just above the 4% level now, which is also the 200-day moving average. So quite an interesting day, and really what it came down to is Jay Powell not quite taking a victory lap, but pretty confident today. The Dovish statement, they reiterated that, yeah, they see 3 cuts in 2024. The market is pricing in 5 cuts right now. The worst case scenario would have been if he continued to say higher for longer. I'm not going to make the same mistake that they made back in the 70s by raising or by cutting rates too soon before we have inflation beat. But he seemed more confident today than I've ever seen him that they've got inflation handled. And the Fed themselves, some of the members had 5 cuts priced in for 2024, but the average was 3 cuts, and the market just ate it up. And really liked it. So 5 days up now, 5 days above the 80 EMA on the S&P, 29 days above the 21-day moving average, making new recovery highs on the big cap indexes and a breakout on mid caps and small caps. Not a whole lot for the bears to hang their hat on today. 11 out of 11 spider sectors up. Gold and silver stocks really rallying, along with regional banks, utilities, and biotech. On the downside, uranium and KWEB, the only 2 ETFs I could find that are liquid and that we track. So we did take a little bit off going into the FOMC. We trimmed FNGU. We closed RSP, that's the equal weighted S&P, and we closed TNA. Bought the equivalent of TNA back, but it's a 2-time to track it separately. But buying IWM or UWM to add back some of that. So net by the end of the day, 1.77% down a little bit. We've got some nicer setups now on some individual names that have been consolidating over the last 5-6 days. So we've got plenty of cash to buy into those if the market presents those opportunities tomorrow. So the bottom line on the day, dovish Fed sparks strong broad rally, large caps 5th day up, and a breakout from this base for small caps and mid caps as well. Can't really ask for a much better day, but I am always looking for that 2x4 on the right around the corner, and I was looking for it today and did not get it. I normally don't worry that much about things. I seem more worried today than I usually am. Like Paul Tudor Jones says, evaluate every position every day and decide if you're right or not. And the market ended up proving us right, even though I doubted it to a minor extent anyway. So took a little bit off, put it back on after we were proven to be wrong, at least on the TNA position. But good outperformance on the day. We'll take it, and we'll see what the market brings the rest of the day. So let's do the portfolio very quickly. Snowflake tried to break out 2 days ago, pulled back into the handle. Another breakout today on the broad strength, so nice action there. I'm going in order of largest to smallest positions. CrowdStrike just continues to be a champ, riding this 8 EMA higher. This is just picture perfect. It's what we look for every time we buy a position, to get a smooth ride above the 8-day exponential moving average like that. And there's been a lot of them that we didn't buy that look even better. NVIDIA trying to reassert itself back above the 8 and the 21 again. ESTC still hasn't broken out, but trending higher. So this has shown more relative strength versus some of these other earnings gap ups that we've bought that are still consolidating or consolidating and then just breaking out today. But that has room to run too. CCJ, one of the few things down on the day, but bounced at the 21-day exponential moving average, still looking great. Coin blasted out to higher highs. This is typical of the 7-day consolidation that I'm talking about. Pullback, bounce at the 8-day moving average, and then break out above. Couldn't ask for much more than this, and that follows on with the strength in Bitcoin that we saw today. GTLB, this is what we want to see. Big move up, consolidate again, breaking to higher highs. Great move there. IoT, this is a tough one to play. This is a volatile one, but making a higher closing high as well, bouncing off the 8. AMD continues to make higher highs, although an inside day today on it. And finally, path gap down, but was positive by the end of the day. Big move Didn't see any news on the gap down, but a big block of shares being sold right at the open, gap down 3-4%, but closed at the highs of the day, and it's at the high of the consolidation as well. That's a portfolio review. Something else that's acting well, one of the big leaders, a firm making a higher high. This is the type of stuff that you want to see in bull markets, and it's reminiscent of 2020, the fourth quarter of 2020, when we were running. TMDX bounced off the 21 2 days ago, back to the top of its range. MongoDB was a loser on earnings, but trying to reclaim that. 2 days around the 21, now making a higher high above that 400 level. Airbnb, another one. If the recession's coming, it doesn't look like it based on this chart. Pulled back, bounced off the 8 yesterday. This is exactly what you want to see in a strong uptrend, restarting its move higher. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. My partner, Dan Stewart, can be reached if you're interested in becoming a client at dan@revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. Of course, it's not how much you make in the markets, it's how much of that you can keep. Market yelling loud and clearly. The bears, if you smell burnt fur, that's bear fur that you smell. Not much more I can say on the bullish side. Again, we're extended. That's about, don't be surprised if you get back a little bit of your gains, but the indices are more extended than some of the individual setups that showed strength a week and a half ago and consolidated. So there are plenty of, and count at least a dozen where we've got low risk entry points in our action list and universe list. That's going to wrap it for a nice green Wednesday, December 13th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.